The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. You get Tom O'Brien and Tom O'Brien. It's a beautiful thing, man.
I love it, totally.
I'm telling you, man. The family that trades together stays together.
Happy to be here, man.
You gotta love it, man. This is a first, by the way, folks.
It
okay,
is.
and this is totally applicable because the bottom line is that I can go back to my grandmother's house when I was a kid, playing cards.
Nice.
No, totally. Do you know what I mean? We have a house of card players, folks. Okay, and Tom is a fabulous card player, by the way. But this is totally applicable because, you know, this morning, last night, Daryl couldn't do the show. He texted me, and I was going to text Tommy last night saying, because, you know, he trades the Nadex product, and I'm looking at him saying to myself, you know, hey, man, you know, and I says, I'm not going to get him nervous, so I'm going to wait till this morning.
So he told me this morning.
That's a beautiful thing.
It worked out well?
Yeah, totally.
It did, man.
So, Dow, we get the Dow up 95, Nasdaq's up 31, S&Ps are up 10. And, you know, folks, when we were just doing the update, this is pretty funny, too, because you get a picture. We have a studio in here, and they can see me through the thing. And I'm saying to Tommy, he says, gold's going to be the trade. You know, and gold is down like $10 then. And I'm doing the update, and they spiked at $5, and I'm hitting the table.
They didn't wait for the start of the show for us.
I know. That's all right. That's all right. As we walk through this baby, we'll see how this shakes out. They're hitting oil a little. Dollar index is up 396 ticks. And folks, if you haven't test drove the Nadex product, come over to our website at TFNN. See the banner on the top, on the side. You can hit that banner, bring up the account. They'll put $25,000 of paper money into your account. And bottom line, you can see exactly how these contracts trade. Okay, so now the question is, where is the market going and what do we want to trade? This is where it's going to get really interesting here. Okay.
So what do you think about it being up so much after yesterday? What is...
It looks to me like a dead cat bounce, you know, but I suspect we're probably going to stay up. Do you know what I mean? It's one of these deals that we had the energy go down pretty intensely, right? You get a bounce, and, you know, being a bear, I like a bounce with light volume. Yeah. You know, I mean...
What about on a Friday? I'm always thinking maybe some big action, or especially down if... No.
No,
not after yesterday, maybe. That's what's...
That's... I think... Well, and this is what we'll do. First, we're going to pull up the E-minis, okay? And we got... look at the Dow. See, you know what's interesting is that one of the tigers in the den was saying that he likes the Dow setup, too. And Tommy was saying the same thing to me right when we were coming on, right?
We'll
the risk
pull
reward.
Up some of those spreads.
Yeah, we'll take a look at that risk reward inside the Nadex platform. So when I take a look at the E-minis here, right? You're up 1150, and it does have a little juice right there. So that's saying that we're at 2090. That is saying that 2093 will get tested again. You know, which is kind of cool. Yeah. You know, so now the question is there something there that would give us some juice? Let me go over to the gold contract again, because what does happen? Well, you know what happens on Fridays? You know, people are used to gold going down on Fridays, and we just had the first sign of strength. You know, that little buy right there, you know, what happened, folks, gold spiked from 70 to 79. That's a monster spike. So someone, hold on 1 second. 72 to 78. Yeah. That's a good spike. So now the question is, okay, can we get 79 once again, you know? Yeah. If we go over to the Dow, I know you like trading that Dow, and so doesn't Jay in the den.
There's some big spreads in there. There's like 400-point Dow spreads, which is $400 per contract. So.
Okay. So here, you take the mouse.
Okay. We'll pull up. Sure.
We're going to pull up the platform right now and take a look at the different risk versus the rewards.
So we'll pull up the spreads that we're talking about.
Yeah.
And we'll go into the Dow. And I like the dailies.
You
just
like
because
you need
2
time.
hours is short. It is.
I agree.
And it's always tough and I do the 2 hours sometimes, but you do the 2 hours and you're wrong in 2 hours and 30 minutes.
They're addicting, aren't they?
Yeah, but the risk reward, there's some good risk reward on these too, of course,
there
2
is.
hours. Because when you have that little time, you can get a good reward for sure.
You can. You can.
So on the dailies, so they mostly go by 400-point spreads. So wherever you are in the spread is what you're going to be paying for your risk reward.
Yes.
So right now, the indicative index is 17,875. So, you know, if you really think the Dow is going to tank, you could go for the 17.8 to 17.4. Now, if the Dow had, 400 points down from here, and these are highly speculative, but you'll see that when you, whoops, I'm entering the.
You got to buy 17,000 contracts.
I know. I really want to go big on Friday on my first show here.
Yeah, totally.
And we'll slide it up. So in this one, you're risking $12 for $388 per contract. Now,
that's crazy.
You have to win one of 30 times to make money in that. Now, the Dow on a Friday could go down 500 points, maybe 1 out of 30 Fridays. So think of it that way.
Right.
Yeah, maybe.
That's a poker player talking.
Now, I don't feel like being that speculative today. No,
right. But that's important. Right.
The other thing though is that you're paying almost, 90 Dow point premium because you don't get a single dollar back unless this goes under 17,800.
Right.
And right now it's at 17,875. So you're paying $75 premium before you get a single dollar back, and you're paying $12 for it. So that's like $88, 88 Dow points in premium before you get your money back.
And that's not bad, early.
It's not bad when you're getting 12 to win 388.
Right. Right. And you're only risking $12.
That's what I'm saying.
That's a whole different ballgame.
That's you buy 5 of those, and if the Dow ever tanks, that's you're spending $60 and $2 grand potentially upside. And it doesn't have to be $2 grand. If it just went down 300 points, you'd be getting $1 grand back.
No, I can see that. And if it went down 75, 85 points, you get your money back.
Exactly.
Well, it would be 87.
Right.
Yeah,
exactly.
87
That's
points.
Right. So for that type of thing, it's not a bad deal. Now, what I like, more often is that, and this would be, so this is a spread from 17.6 to 18,000.
Okay.
Now, you're barely paying a premium. The market's basically at the indicative index.
Right.
Which is nice. So, it's not as speculative at all, and you're almost going to trade point for point. So per contract, if you went in, so here you're risking 130 to make 270. You're almost getting 2 to 1. Now the reason why you're getting 2 to 1 is because you're going to be paying a small premium.
Yes.
And it's pretty close to right in the middle of the spread. And that's why, it's not quite, and that's where your profit 2 to 1 comes in. So that's not bad.
No, that's not bad.
Now what the Dow, especially recently, 130 points up or 270 points down, it's
a heartbeat.
Yeah. So you really have to know when you're doing this, when your max loss is 130, that's, unless you plan on getting out of it, which you can do at the same time, but you're putting 130 on per contract.
That's pretty cool, man. Let's see what they're doing over here. What do you got? Okay, so go ahead. Let's pull this up.
Do you want to look at gold?
Yeah, I do. Yeah, let me pull this up just for one more second. So that's the Dow, GCM5.
You know what I've said too, the Dow only has 30 stocks, so you can really get some volatility.
Which is cool.
As opposed to, they have Russell contracts and so forth, so those are great trades too, but they're a little bit less volatile because you're working off a 2,000 stock index. How much, or if you really get some action in a Dow stock, you can get that full spread in a day.
Exactly.
Yeah.
So looking at gold, right? What you have, folks, is this: is that we had the surge up to 79, which is dynamite. Okay. We love the surge up to 79. We get a pullback, and the pullback's anemic right now. It'd be really great if it actually pulled back
you're gonna like that,
to the 70. You know what I mean? Because it's like, okay, all you need is one more, basically top side. Please reintroduce your co-host. Come on, Z, it's my son, Tom. It's Tom O'Brien.
Gotta love it.
We're like the George Foreman family. I mean, we got about 6 Tom. We got 6 Tom O'Briens in the family. We actually do, folks. Okay. Let's go to Brent Martinez. Hey, Brent, what's going on, man?
Hey, Tom, how are you?
Doing great. You having a good day out there?
I am. How about you?
Yes. Yes.
I just had to call you. It's It was another good day for that GLD trade this morning. It got down to where I could do the 112.50s, the weeklies for 23 cents, and then with that spike, I was able to get out for 60.
That's amazing, man.
Nice.
So cool. And you know, if you look at the GLD, folks, okay, you know, this is the typical one when you have heavy volume before you get to the swing point. You get to the swing point and then it just hasn't enough juice. You can see yesterday you come down with 9.4 million, right? But you're going into 12.
Yep.
Your swing point has 7. But today we do the swing point, and what you're going to see, we probably won't do 7 today. Well, we might, okay? But bottom line, I like the idea of buying something when the volume comes out before the swing.
Yeah.
Because the swing's where the market talks, walks, and squawks. Cooking, brother.
All right, have a good day.
Have a great one, man. Have a safe one. So, this is good, Tom. So let's go over to gold. They got gold down $10 right now. This is what we like, folks.
So it just came all the way back from that pop. Yeah.
And look at the dollar. This is interesting. Hold on. We'll have to look at the dollar first. But let's
pull that up?
Let's look at the risk-reward first.
On the gold?
Yeah,
okay.
on the gold.
And see where the spread's set up.
What we're looking for, folks, is that we're going to look inside the gold contract. We're going to look at the risk and reward.
And same thing, commodities. We're just going into the spreads. You can see everything there. We're going into gold. Again, I like the dailies. They're bigger spreads, and they give you more time.
Right.
Now, if you're in the middle of that spread, you're going to have to risk a lot, though, in terms of you're risking the potential in the middle of that spread.
Right.
So, indicative index, gold, 1172.
Yeah.
Yeah, you know what's going... Yeah, this is going to be our best bet right here.
The 1150. That's interesting.
1150 to 1200. So, again, we're splitting the spread. We'll go over it.
See that? I think yeah. We got a little thrust up in the market. You stay right there, folks. Tom O'Brien, we're going to be coming right back. Dow right now is up 140, Nasdaq's up 44, S&Ps are up 15, gold's down 1030. We're going to be right back. Sweet.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tom O'Brien and Tom O'Brien. It's a beautiful thing. Dow right now is up $1.42. You get the Nasdaq up 46. S&Ps are up 14. And if you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. Go see the banner on the top, on the side. You hit it, bring it up. They'll put $25,000 of paper money into your account, and you'll see how these contracts are so vibrant. And you've heard the promotion many times that your trade is your stop. Now, we're going to go over and go look at the euro and the dollar index. So the dollar index, folks, has got a nice little pop top side. We take a look at even the scanner. Bottom line is that the dollar index is still on a negative, even though we got a pop of 478 points. So I expect what you're going to see, and this is a classic, okay, that this index wants to pop, you know, and it would make sense because bottom line is that it came down hard. It coming into a Friday. Yeah, and there it is. Okay, so the index right now is up 491 ticks. This thing can, at 95.20, that can go to 95.54 in a heartbeat. Now, that being said, why don't you take the controls, and what we're going to be looking for, we're going to be looking at that index and say, okay, we think that the euro is going to go lower, you know, on a daily basis.
You could short this, right, if you're bullish the dollar.
That's right. Yeah. That's right. Now, what we're going to do first, why don't you bring up the daily first, because we just looked at this. Sure. And the daily, you know.
So, again, we're over in the Forex spreads.
Yes.
Here they all are, euro, US dollar, and the daily. Now, there's one spread.
Right.
And it's a big spread. What happens is, you can click on it. So you're getting a spread in the euro US dollar that's really a 600-point spread for one contract.
Right.
And right now you're pretty close to splitting the market.
Right.
And so by splitting the market, you're risking 300 to make 300, which isn't a bad deal though, because you're not paying very much of a premium. You're getting the trade almost at market.
That's right. Now, what you want to end up doing, folks, is this. So we're going to go from that, and then we're going to go down to a smaller time frame. And the main reason for the smaller time frame has to do with Europe, has to do with Friday.
Yeah.
And the reality is that, listen, by 12 or 1 o'clock, market's over.
Right.
Do you know what I mean?
No.
So now
and you get a better risk reward for a short period of time.
It is. So watch this one, folks, and we're going to sell this one.
So looking at the new, so you can see all the contracts right here. Now they're bigger spreads for bigger time frames. That's what happens. So the biggest time frame was the daily.
Yes.
If you only want 250 points instead of a 600 point, you can go with 7 to 3.
Well, let's look at the 7-3. We didn't look at that one yet. We're going to do this. Okay, so we're at 12.16 right now. And we're looking to sell it.
Yeah.
So that doesn't work either. It's not that it doesn't work. It's just
you're
that
not at the top of the range, right?
Right.
And that's what you're looking for.
And that's what I'm looking for. Right.
You know,
Oh, that's not bad though. That's
it's
interesting.
not, because you get all the way down. You're going to 110 basically.
Right.
And it's at...
Okay, hold on. We got to look at that one. So that's going to be a $60 risk for 190.
Exactly.
And
you're selling one contract, so that's a 250-point spread. You can see. You know,
right.
Wherever you are in this spread, it's
right.
just going to split the 250.
Right.
So you're risking 60 and make your 190.
Right. Okay, so that's pretty cool. Now let's go down to the next one. The next one...
Going to noon?
10 to noon.
Yeah.
You know, because realistically, folks, 1 o'clock, the market's done. So we're...
Now these are 100-point spreads.
That's
so
right.
There's going to be basically $100 in play.
Yep.
So you're risking 33 to make 67, and that's going to be on the lower end of the spreads. You know. Now you can play it the other way if you're really confident, because you're paying a little bit of a premium to have that better risk reward when you're going there. So if you split the middle index, just to show, but that's how out of whack it gets, in that you're really trying to lock in a profit, and if you get a huge move the other way, you're risking 80 to make 20.
Okay, so
There's
now...
money to be made on that side, though.
No, totally. Now it's cool. Let's go back to the one in the afternoon, because the risking 60 to make 190 is a better deal.
It is.
Right? Because
you're paying a little bit of a premium, and that's the only thing that I always keep in mind.
Okay.
Because you just want to look at where you are in the indicative index and where the market is. You know.
Okay.
So you're paying 2 to 3 ticks. You know, the bid and the offer is 12.12 by 12.15.
Right.
And right now it's at 12.16, 12.17.
Okay.
So that's where, you know, if the market stays where it is, you're going to lose there, because you're paying a premium to have a 4 to 1 almost.
Right.
But I hear you. These are trades I like. When 4 to 1, that's a 3 to 1. That's a good number.
Let's do this one.
Let's do it.
Okay, so we're doing this one. This is a real...
So
we're going to fire this baby off, right?
Just make sure we have everything. Selling a contract. We're selling the euro US dollar.
Right.
Order received.
That's a beautiful thing. Okay.
We're in there.
See that? Okay, all you tigers and tigresses, go sell it. This is Tom O'Brien. Tom O'Brien, you stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow's up 133, Nasdaq's up 44. We're going to be right back. This is awesome.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Appreciate you growling and prowling with us out here. And we'll take a look at this market. You get the Dow up $131, Nasdaq's up 42, S&Ps are up 13, gold's down 1050, laying out there at the 1171 area. Where we're at, we're basically saying that the euro's going lower, dollar's going higher. You're looking for that dead cat bounce. And I suspect, you know what's so cool, man, is that we had a Friday. The moves already in the dollar have been tremendous. Yeah. Do you know what I'm saying? So the dollar's got crushed, folks, okay? You know, last basically 2 weeks. Yeah. So going into a Friday, just like the market's bouncing with lighter volume. It just totally makes sense that, hey, guess what? They'll jam the dollar up.
Just have some volatility.
Yeah. Exactly. Have some volatility. And the thing that's cool about the aspect of you don't have to be right in the context that it's a change of trend again in the dollar. I think the dollar's topped out. But what it is that nothing goes down forever, nothing goes up forever, you know? And in this case, it was just a risk-reward trade.
Right.
You know? I mean,
right, no.
Because it just...
I like trading on Fridays, too. The fact the show's on Friday.
Oh, yeah. Interesting. Okay. Yeah. That's cool.
For bigger moves.
Yes. No, I'm with you.
Not in general, but if you're playing like a 3-to-1, 4-to-1.
Right. That's right.
Thursday's probably good, too, as we saw yesterday.
Right.
They just try and beat Friday if they really want to make a trade or a big trade and the market's going to move.
Right. Well, what's interesting... Okay, so probability-wise, right? I mean, you've played so much poker; it's amazing, right?
I've learned from maybe you a little bit.
Yeah, but realistically, thousands and thousands of hands. Sure. Okay, so you really understand probability, right? Sure. So when you are taking the market apart, you know, as to what the risk is versus the reward is, it always is intriguing that. You only have to be right so many times to at least have your money back, and then you go from there.
That's, you know, like I was saying, you break even right away. Now, you know, in that Dow spread we're looking at, that's a 90-point move you have to move for you to break even.
Right.
You know, so you better get some big moves occasionally, even if you're going to only put up $12, $18 to make 388.
Yes.
But you need to get those moves occasionally because, you know, when it moves 90 points, you still lose all your money.
Right.
So.
Or you break even.
Right. Or you break even. You break even at 90.
That's right.
But
it had to do 102 points to get your $12 back.
It was right. I think it was like 88.
Right.
But you can see that every day the market could go down 75 points from where you make that trade,
Right.
and you still lose all your money.
Right. Right. So it's important to understand that. Right.
You know, so it's just understanding how much volatility and what you're putting in play, and then really it's just you making those calculations of how often that's going to happen.
Right.
And on Thursdays or Fridays, if you're playing some of the bigger moves, you know, I just think about it from my own mental perspective of having trades over the weekend in the market being.
Yeah.
That's
right. Money at risk versus not at risk.
Then, you know, the beginning of the week's big too, because people come back and they make trades right away from the weekend and what happens.
Well,
so.
And what's interesting, folks, about the aspect of where we are with the euro trade is this, is that if the euro is like right here, all we'll end up doing out of that $60 that we risk, you know, we might lose $10. That,
right, right.
That's where this really gets interesting,
exactly.
right? Do you know what I'm saying?
Right. You're getting 3 to 1 on your money.
Right.
And, you know, it's got to have a big move to make that 3 to 1 on your money.
Yes.
But like you said, I mean, it could stay stationary and you're just going to pay a small premium, which I think was probably out of our $60, yeah, $10 or something like that.
Right. And when we put the trade on, it wasn't even $10.
Right. I think it was like $8.
Exactly.
Right.
And your probability, I mean, you know, we'll see where this shakes out, but...
I mean, this is the chart, just so you can see behind us, if you have to make sure it goes to it. This is the chart of the euro that we shorted. Now, we got in here after we saw, you know, the move happening, which is good
That's
too.
right.
You know, but there's fast moves, and if we get another move like that, that's a big move. You know, you can open this back up. And these are the Nadex charts.
And you see that, you can see when you're looking at this chart, folks, what you can see, and I love a wide price spread.
Right.
Because wide price spread, folks, is saying, guess what? Someone is in there selling. That's not you and me.
No.
That's an
and
institution.
We're not going far back. This is yesterday.
Right.
You know?
Right.
And that's not a big deal.
No, it's not. And what does happen if you like the currencies, if you're trading currencies in Forex, folks, get over to Nadex. Don't even think about it, because inside the foreign currency market, fast moves. And it's amazing just what a few ticks can do.
Right.
I mean, it's a big number.
You know, I was looking at that chart, like we were saying, and that was a fast move we had right before.
It's
you know,
huge.
Right. That's
huge.
a big move. In those
is that a 10-minute chart or
this
minute
is a 5-minute chart?
5-minute chart. Okay.
Yeah.
Okay. Cool.
I mean, that's a big bar in 5 minutes.
No, it's a huge bar.
Yeah.
And what that does is that most times, folks, when someone is buying or selling something, they don't go in once. That's what it really, you know, they don't go.
We went from 112.90 almost to 112.30 in 5 minutes.
Right.
I mean, that's $60 actually. We almost doubled our money in that.
And that's
already.
And
in that 5-minute bar.
And what does that happen, folks? Okay, and this is what's really cool. I like about the currency trades inside of. And all of them you don't have to stay in, but because you're only giving up 4 to 6 ticks inside the currencies.
Yeah.
You can turn around and say, okay, my risk versus my reward. You can put the sell in on the other side or buy to close in on the other side.
And it's a spread. So if you're as long as you're not completely on an outlier in the spread, you're going to get pretty close to where you are at market.
Right.
If you just let it play out.
Right.
You don't really need to close it.
Right.
You know, if you're at each end of the spectrum, then you're going to maybe pay a premium if you just let it expire.
So when you start trading this, how long did it take for you to just really start figuring it out? Meaning that first looking at the contracts.
A couple weeks before you get comfortable, at least. Just making sure, because, you know, you don't understand what each spread is. And as you can see, each spread is wildly different. 100-point spread's $100. You can risk $12 to make 80. All of a sudden you pull up a currency spread, and you're risking $300 to make 300.
Okay.
You know, so just acclimating to that was the biggest. But that's a huge, just understanding risk-reward. And that's why I like the dailies now, because there's 400-point spreads on the Dow.
Right.
You know. That's a nice spread.
And we have that kind of action on the Dow, too.
Right. I mean, yesterday
was a trip.
Yeah, I know.
Right.
Yeah. I mean, the NASDAQ, too, same thing. 80-point spreads.
Ooh.
Same 80-point daily moves.
Right. Which is a monster number. There's no doubt about that.
If you can get the full movement of a spread within a day, then that's a great deal. Because you're getting a huge risk reward.
Right.
As long as that just happens occasionally.
So when you're looking at it, I can kind of how you're talking when you were pulling up the spread. So the quickest way to cut to the chase would be say, okay, am I dealing with a 250 spread or a 100 spread, right?
You have to know how big your spread is. And you know, if you don't know, I just put in the trades like you know, you can get it real quick, and it's going to tell you, you know, in terms of I'm looking at binaries. That's But again, going to the Dow 30.
Okay.
Pulling up the dailies.
Yep.
So you're looking at how big the spreads are.
Right.
Did I just go into the dailies? Yeah, so here's our 400-point spreads.
Yes.
So it's 17.8 to 18.2.
Right.
You know, but what does that 400-point spread mean to what you're at risk? And that's
Right.
where you really need to understand. And basically, every point here is going to be $1.
A buck, exactly.
Yeah. You know? And again, same thing. You're just putting in the bid. And I just clicked on a random one, but same thing. It's going to be a $400 split. So I don't like in this market, only because I like analyzing the risk-reward of bigger moves on one side, where
Yes.
I don't like putting up 4 to win 1.
No, I agree.
You know, it's just, and I'm
patience.
sure you can do it, because there's
Right.
plenty of times I'm putting up 1 to win 4 and I'm losing, so
I'm
you
with
can do it.
I'm with you.
And you're getting premium when you're doing that. So,
Yeah.
you know, when there's no volatility, you're collecting money. You're winning on those
Right.
days where you're putting up 3 to 1. All you need the market to do is settle right where it is. So
Right.
that's a strategy too.
That definitely is a strategy.
I don't understand that strategy as much, so I don't play it.
Well,
that's all that happens, you know, but I'm
yeah.
sure people do. And
Right.
they look for moments of no volatility, and they capitalize in that same deal.
No, for sure.
Yeah.
I can see that.
Yeah.
Because if a market can flatten out,
Right.
and
thing.
you're basically selling into the you're taking in the premium, selling in the other side.
Exactly.
Yeah.
You're exposing yourself to some risk reward if there's big moves in the market. But same thing, you're going to be winning a lot more, because when the market doesn't move, you win.
Yeah. Right.
Yeah.
Right. And so, you know what's pretty cool about that? After huge moves in the market,
Right.
and it takes energy out of the market, that's when you want to get on that side.
Yeah.
Because that's a different
You could,
ballgame.
right?
Yeah. No, that's
It's tough, though. When do you say that after the market moves 200 to 400
No,
points, and then you say, I don't think it's going to do anything?
I'm a contrarian deal.
Right.
I mean, there's no doubt about that.
I don't like that either. Putting up, you know, $80 to win 20 when the market just moved 2%.
Right.
That's
Right.
I don't.
No,
yeah.
I agree. You know, well, you know what's interesting? I was listening to there was an interview, folks, yesterday with the CEO of TD Ameritrade, and their base is active traders.
Sure.
They actually check this out. They have 40% of the derivative market.
Okay.
Okay.
Yeah.
And they were talking to him, but they were talking about, do you think we're at highs? You know, and he says, well, listen, a lot of people are in. And they were asking him, I knew what they were getting to. They were getting to the point of, you know, do you think of all your people long?
Yeah.
And he says, the crowd we have are contrarian investors.
Sure.
And
Yeah.
that totally makes sense, because I think most traders are contrarian. You know what I mean? It's not that they're contrarian.
No,
you can be trending.
You can't just follow consensus.
Yeah,
and just,
that's right.
Yeah,
Exactly.
You have to have some angle of how you look at that and what you look for.
Right.
You know, and like there's a million angles to look at. Like,
No,
I
there
just
are.
look for those really volatile moments, and I think that I can be right more than I need to be wrong. And if you're talking about a Dow spread like that of 400 points, and you're only risking $18 to win 382, you know, I think I can analyze that situation where I can make enough of those trades where I'm going to lose at least 9 out of 10, but that's fine.
And what does happen though? So talk to me about the learning curve and probability, because what I hear off you is that you have to have confidence that you know that you can lose. It's like getting whacked. You
So
get
you're
whacked.
going
You
to
get
lose at least 9 out of 10 times.
But do you know
on
what I'm
that
saying?
spread,
You get whacked. So when
You
you're
just have to
first
understand that.
learning that, even because you were really learning that in poker. Well,
Sure.
it's hard to do it
no,
first.
for sure.
Okay.
Especially
So
poker tournaments, you're going to, you know, only 10% of the field in a poker tournament gets paid, and that's just getting your money back.
right.
That's a tough thing to go into a tournament knowing that 9 out of 10 times you're going to get nothing back.
Right.
And even when you make the money, you're just going to get your money back. And so you really, you know, it's easy to figure out the odds. Not easy, but you can.
Yes.
And then it's applying the correct determination of how often those are going to come through.
Right.
Like, you only need to win 1 out of almost 18 times on that Dow spread that was 18 to 32. But then the determination becomes, how accurately can you predict how many times out of 18 you're going to win?
Right. Okay.
That's where you just need to make that. Yeah.
It's pretty cool.
Yeah. No, it is. It is. There's big risk, you know.
So the emotion gets taken out of that. If
There's
you keep,
always emotion, of course.
No, for sure. But there's definitely emotion. But if you actually stick to the math, it doesn't make it easier, because but
it's just important to
pulling the
understand
trigger
it.
is
Right.
different.
It's important to understand it, because then as everything's happening, you understand it. Now, if you're, you know, if you can make that trade profitably 1 out of 13 or 14 times, you're going to make a lot of money.
Right.
But guess what? If you're making profitable trades only 1 out of 13 times, you're going to go 25 times sometimes losing, and then you'll win a couple.
That gets interesting,
That's
right?
You know, easy for sure. Especially when you're talking about volatility. If you're playing that, you could have a flat market for a while, then you get 2 or 3 big days in a row. So you can go on streaks if you're playing with scenarios like that.
So that's where it's important for money management. Huge, right?
For sure.
Right.
Yeah, and especially if you're ever doing something so speculative like that.
Right.
Because, you know, there's huge money to be made with $400 per contract, putting up $15.
Right.
You could buy 10 contracts, and if those all go, you make $4 grand for $150. So there's the temptation, but like I just said, you're going to go on streaks where you lose 25 in a row. Do you really want to put up $150, 25 in a row?
No.
Yeah, that's where, you know, before you know it, you're at a few grand, you're only trying to make a few grand.
Right.
So,
right.
That's like anything else, money management, risk.
And in our business, money management, I'd say, is the most important part, because if you don't have any money, you can't trade, right?
Yeah, and especially with these, like the 400-point spreads, and I don't always trade those, but today, just after 200 points yesterday, I just wanted, that's a trade that I could make on a Friday. And you make it and you don't forget about it, but that's, you know, the Dow has to move 90 points before you even get your money back, so say goodbye to that money. That's, you know, that's when you're putting up, that's an investment. Like you said, that's your stop. You're risking that $18, and wherever that ends up coming at the end of the day, that's what I'll accept. Which is really cool in the aspect that you can have a life. Yeah, there's no stress, you know, because and whether you trade, you know, 10 contracts on those, depending on what you invest and where you're at, but you keep it, you know, where you understand you can. If you're getting 20 to 1 on your money, you better understand you're getting that because you're going to lose a lot.
Yeah.
You know, so that's just all you have to understand.
That's pretty cool. You know, okay, so let's go back over to our trade again, because and this is where this gets really interesting too, folks. Okay, and this has to do with the risk versus the reward, but that when the trade goes against you, you don't have to worry because you already know what the risk is. So what we just had here, you know, we're short, and the euro just popped all the way up to 36.
Yeah.
Well, guess what? It's already back to 28 again.
Yeah. And so that was only, you know, like we're putting in 66. I think I saw we were down $8 or $10 on the trade at that point.
Right.
Yeah.
But what's cool is that if we were just trading a Forex product, that would be big money, folks. Okay. We know what our defined risk is. Okay. And that's
if the euro pops from here, then, you know, our risk might deteriorate to 0, but that's fine because we're risking on a 3-to-1 trade.
And realistically, so I'll go back over.
And that would be a big losing position, right? You're saying realistically that's not going to happen. That's a fast move to the losing side. But like we saw, it would just have to pull back to what it just.
Exactly, and we're going to I'll bring up the dollar index quick because what we have, and see this is anemic on the dollar index, the pullback.
Yeah.
So
that volume's on the way up, right?
Exactly. Our probability is that you get a small ABC up. Now we come back, we'll do the ABC projection, folks. This is Tom O'Brien. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. I know.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. Really easy to do. You'll see the banner on the top, on the side. Hit the banner. You bring up the platform. They'll put $25,000 of paper money into your account. You'll see how these contracts trade and how vibrant they are. As you're looking at us,
just so I know we're jumping here, but the demo account, that's where. And when I was talking about the 2 weeks, that was actually with real money. Where I had probably when we were in promotions and stuff like that, I was playing with that demo account for at least a good month to understand.
Which is great,
and
right?
that you're just being, I mean, I don't want to say reckless, but you're doing whatever you can, as much as you can, just to understand what's going on, which is great, you know. And then you pretty much understand it, but then when you put money in, you know, you take some time where you really understand the risk reward for every contract, what you're looking at.
Different head game when you get the money out. No, but that's great.
That's where I went when I, you know, and you go back and forth, and we didn't go over the binaries, and I still make binary trades too, though, and that's just a little bit more speculative because, again, I like doing the risk reward, and so most of the time that binary is expiring at 0 because I'm doing a 3-to-1, 4-to-1 risk reward. But
which is cool,
for the demo, that was
it's important.
The trade, but the demo, that's an easy way. It is.
It is,
and it's fun. It is.
Yeah. Oh, it's definitely it's where it's at. So. What we have up here, folks, is the dollar index, okay? Now, because we're short the euro. Bottom line is that you can see the first expansion up, okay? We went from a price point of, let's see, 710 up to 145, which is a monster move. That's 435 ticks. When we pull back, now we did that with 7,000 contracts. We pull back, and we pull back with 1,100. So your probability is number one is that you're going to at least test the high, which is 95.30. But you very well may have an ABC structure up. And if we do, that is one monster move, because if we add the 400 there, you're talking about a 95,600, which would make sense because 95,505 is the swing point of yesterday.
Yeah.
You know? So when you're doing that, you know, what you want to do, you combine the bottom line, you combine what your risk reward is, what you're putting up. Then you look for a price projection.
Right.
That,
and I just see where it can make sense, where it can go to.
Right.
You know? And then I say, how often is it going to go to that point, I think?
Yes.
That's where you decide whether you're going to be a winning trader or a losing trader. When you say how often, how many times out of 10 is it going to go to that point?
Exactly.
So that's what you just have to, as long as you understand the risk reward. So this is the euro.
Yep.
Let's pull up the Nadex.
Yep.
Let's see where we're at. So we're close. I mean, you know, we're pretty much at where we entered the trade. We're slightly in a losing position.
Well, $5 right now. We're losing $5.
We're losing $5 right now.
Now, where can you trade and lose or win $5 and have that type of risk?
You're putting up 60 to win 290, 250 point spread.
Right. And
we have till 3 o'clock. There can be some volatility even after Europe closes. There can. I see it sometimes in the Dow. Now, the Dow.
You know what I forgot? Oh, this is awesome, man! I forgot we did the 3 o'clock trade. That's even better.
Yeah. So we have, and that's why this isn't determined.
That's huge, man.
Yeah, right.
You gotta love it.
Yeah. So we'll see. It's jumping around right here. You know,
yeah,
it is.
Well,
it's going back and forth, but it can just stay here for a little while, and then maybe it shoots back down, like you're saying. This could be an ABC.
And what's cool, folks, is that the correlation. You know, what I like to do is that's why I like trading, whether it's the euro or the dollar, because the correlation inside the currency markets, you can't get volume, okay? Because there's all different setups, right? You can get volume, however, though, in the dollar index in the future market, okay? Yeah. Now, the dollar index, folks, is not just against the euro, but the euro is 60% of it, of the index itself. Right. So that's cool. Do you know what I mean?
No.
Knowing that context.
It's all information that you can use.
It absolutely is. Well, listen, man, this is awesome.
Love it.
Wow! You get the O'Briens growling and prowling. We appreciate you being out here, folks. You stay right there. We got our man, Mr. Basil Chapman, coming up. Nico and Paige going to keep you healthy. Dave White, and we're going to be back here this afternoon. Have a great one. Have a safe one.
Thanks, man.
Awesome.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.